Hey, this is Dan Passarelli. There's been a lot of chatter about ATER stock and that it could be experiencing a pretty good short squeeze. Now, if you look at a chart of ATER, which you can see right here, you see that it did have a little bit of a squeeze already. In fact, on this day, April 4th, it went from a low of 245 to a high of 393 on very high volume, and it ran all the way up to a high of 726 just 15 days later. Now, following a little bit of a pullback, there was a pretty good up day today, bouncing off the 21-day moving average, and there's a lot of folks who think that this stock could continue much, much higher. Now, what's driving this? Well, what's really driving it is just simply call demand. There's folks who are buying a lot of options in this stock. If you look at just today's volume on the call side, you see that there's a whole bunch of calls being opened. We can tell it's an opening transaction because the volume is higher than open interest. That means they weren't closing what's already open. They were opening new contracts in this strike, this one, this one, this one. Looks like probably this one and this one as well. Not to mention this one and other strikes throughout other expirations. So what that means is there's a lot of buying interest. When people buy calls, the market makers who sell the calls, they have to buy the stock and they get short gamma. And that means when the stock goes higher, they're forced to buy more stock, which can just exacerbate a short squeeze. Now, if all this is interesting to you and short squeezes are a thing that you either already trade or have been interested in trading, I'm going to introduce the market taker variety of short squeeze trading in a webinar tomorrow night. Now, this is a complimentary webinar where I introduce our system. I show you literally exactly how it works. And if you want to register for that webinar, which I encourage you to do, go to this page that's going to pop up right after the video. This is Dan Passarelli, Trade Smart. I'll see you in the webinar.